Half an hour away from the opens in Hong Kong, Shenzhen, and Shanghai. You're watching The China Show. I'm Yvonne Man with David Ingles.
Happy Friday. Our top stories today. Stocks across the Asia-Pacific joining this global rally that's ahead of U.S. inflation numbers coming through in the next few hours or so. We're watching Chinese tech names specifically as Beijing deepens its push for self-reliance in cutting-edge industries.
Risk appetite also getting a boost after the White House confirms a high-stakes meeting next week between Donald Trump and Xi Jinping.
And Intel's Asian suppliers rallying on its return to profit, an upbeat forecast signaling progress in its comeback. Good morning. Final session of the week, just under 30 minutes away. Two major pieces of news, encouraging pieces of news here, really getting momentum back on track here. So one is, of course, this meeting that we now know is scheduled for next Thursday between the two presidents. And, of course, also when it relates to China, of course, the fourth plenum and the readout there, a focus on technology, smart manufacturing. We'll get into all of that in a moment. But as you can see on your screens, by the way, Taiwan is shut today. We are called higher across most equity markets this Friday morning. Right. We're coming off speaking of higher, quite a big pop in oil prices yesterday, the biggest since, I believe, June or July on Brent in West Texas. We are seeing that a little bit pare back, sideways, if you will. Gold, as things stand, on track. And I think the first weekly decline, get this, and it's almost November, since August. So it's been quite a run there. Overnight, the big moves there, the first reaction to the readout, which came out late afternoon on Thursday, is one on price that's much, much better. Although volumes were about 50% lighter than usual there, but obviously some of the big names will be tracking going into the open today. Hang Seng Tech and everything in between. Futures are pointing higher, should be coming up on your screens very shortly. There we go. That's a nice pop. Let's call it 1% on the A50 futures. And, of course, we're looking at a 10-year yield, 30-year yield specifically, hovering still near these one-month lows. But, yes, this geopolitics and internal politics all pointing to reasons to buy this dip.
Yeah, save the date when it comes to Thursday, right? Yeah. Next Thursday at APEC. That's really when we're going to see Trump and Xi meet. So that was in itself enough for these risk assets to really bounce back once again. You add that to what the readout of this fourth plenum is looking like, and this emphasis on tech, right? New quality productive forces is certainly one reason why maybe the tech play is going to be back in vogue once again.
Yeah, so a lot of the stuff that took a back seat this week because of the momentum trade falling back. So you had dividends coming back in. So I think that's certainly one area of the market I'm curious to see play out today as momentum comes back. Interesting, and just in terms of the sequence of events, right? We got the key takeaways ahead of the longer document, which comes out in March on the readout there. And I think in the next hour, we'll be having a briefing, as we were just pointing out earlier on, talking about how some of the takeaways from that readout. Just very quickly, and before we forget, and we'll probably forget about this because there's lots of other things, but yes, it's a big earnings day across Chinese markets today. Great Wall Motor, Ping An Bank among the many names coming out with their report cards. Likely towards the end of the trading session. And yeah, just a quick snapshot of the names to be watching on the back of this earnings theme coming through today. There we go.
Yeah, it's going to be busy, right? The more I hear about what's going to come next week here when it comes to APEC and
how are they going to fit everything in? Is my
or even just the people,
yes.
Right? We're talking not Seoul, right? We're talking about Gyeongju, and this place that is quite beautiful, I hear. So I'm going to be heading over there, Steve and Sherry as well. So certainly it's going to be a big sort of week for the China show, specifically at a time when we're seeing this plenum, right? You know, there was this emphasis on self-reliance, right? It seems like they're really doubling down on this growth model, really relying on the external demand to support growth now. Yes, you heard a little bit of consumption, but I think economists were still a bit disappointed by maybe not concrete or at least not much conviction on that front there. Maybe.
It was almost to your point, like of an acknowledgement of the underlying economic reality, right?
Yeah.
That for now there is some softness in that demand curve right now, and the need really to lean into technology and maybe smart manufacturing. And is that implicitly a blessing in terms of exports as being a key driver, again, of the Chinese economy? All right. In fact, let's get into all of that. And joining us out of Shanghai is Min Lu, of course, our China correspondent, who's been poring over a lot of these things. Min, what stood out to you?
obviously, I think the big focus this year is tech self-sufficiency and China's industrial policy, right? And I think it's interesting to read the government's assessment of where the economy is right now. It says that China is facing a new period of coexistence between strategic risk and opportunities. They're entering a period of many unpredictable factors, and that means they need to double down on doing their own affairs well. So what does that mean? It really means that they have to rely on themselves for, for tech, for capturing the commanding heights of science and technology. So the article talked about how China wants to be a powerhouse, not just when it comes to chips and AI, but also transportation, aviation, internet. So that's a big focus. And the article also says China will double down on advanced manufacturing as a key backbone of the economy. Now, bear in mind, manufacturing is already the biggest contributor to GDP, about 25%. So I can imagine this is likely going to be a continued sticking point with the US, which has already accused China of being over-reliant on manufacturing and exporting its overcapacity to the rest of the world. And that could set the tone for the Xi-Trump summit next week.
There was some text that did mention about bolstering consumption, which seems to be the other big focus now. If you break down the language, what does that tell you, Min Min?
Yeah, consumption certainly is a key focus for the next 5 years as well, because it was mentioned 4 times in the communique, which is more than the one time it was mentioned back in 2020. This is where there is a little bit of a divergence in terms of how analysts are reading this. Citigroup, for example, is saying the language there is perhaps not strong enough to show China is determined to break that deflationary streak, especially with terms like anti-involution being omitted from the communique. But my take is you've got to bear in mind that this is a broad policy document, and the detailed blueprint is not necessarily going to be released until March of next year during the 2 sessions. So there are other analysts like Nomura's Ting Lu, for example, believing that we could see the PBOC cutting rates by 10 basis points by the end of this year. And Larry Hu from Macquarie as well, saying that this could be a clear signal that China will focus on combating deflation after the 4th plenum. Perhaps we're not going to see any near-term stimulus given China is on track to meet the growth target this year, but longer term, that's certainly going to be a big focus.
Min Min, what else? What else stood out here apart from what we've already talked about there?
Yes, so I mean, the big focus has been on tech and new quality productive forces, right? And on a side note, so sort of the flip side to that is that perhaps China is not so focused on achieving quantitative growth. The communique mentioned that will be kept at a reasonable level, which some analysts believe to mean that China will keep its growth target over the next 5 years to be somewhere between perhaps around 4.5%, which is in line with most economists' forecasts that growth is going to trend below 5% in the coming decade or so. But the other thing that is a bit of a concern to me is when it comes to consumption, a part of it is about improving people's livelihood so they have the money to spend, right? But improving people's livelihood is actually quite low in the ranking of priorities in the plenum communique. And it seems like if you read into the details, it says that China will create incentives for various business entities, which Goldman Sachs believe to mean that we could see perhaps market deregulation or policy support. There's also mention of removing the barriers to create that unified national market, which is important to reduce inefficiencies and wastage in investment. So it seems like in order to boost consumption, they might be focusing more on the supply side reforms rather than the demand side, and that could be something that perhaps is falling a little bit short of expectations among investors here.
Yeah, and Min Min's great point. When you mention about what's been mentioned and what hasn't been mentioned, right? We just threw up this graphic from Goldman Sachs and their report from Hui Shan and her team. And they really crunched the numbers. They really did a whole word count on what really mattered this time around. Let's show it here real quick, because it really was the tech reliance that certainly was one of the key buzzwords there: stability, consumption, and risk control that was increased. Stable, what we maybe hear is pretty neutral, and maybe is the livelihood side of things, security, employment. What has decreased, though, they've highlighted here, was the reform side and also the opening up sort of the story there, Dave. Yeah,
and I wonder if that is almost a sort of a refocusing. So you know how in the past few years we've talked about dual circulation, self-sufficiency, obviously, and whether or not because of what's happening outside, this turn inward to focus on your strengths like tech and advanced manufacturing, and leaning into really a growth model that has, I wouldn't say has worked cyclically, but has worked to give them a sort of a better position in these negotiations, right? When it comes to many of the strengths that rare earth, for one, of course, is one of the things that have highlighted going into this negotiation today. But anyway, there we go. We'll talk more about this and the key takeaways there. At the top of the next hour will be the briefing. And yeah, Goldman Sachs is with the word count. Control F for the win. Okay. Counting down to the open of trade. Under 20 minutes away, the opening bell. Futures are pointed substantially higher. Here, as we go into this open, this is the China Show.
Let's get back to our top story here right now, which of course is the fourth party plenum that wrapped up, and with the promise really to enhance technological self-reliance and grow the domestic market in the next 5 years. Joining us now is Ning, professor of finance at Shanghai Jiao Tong University. Ning, it's always great to have you back on the program. You've been able to read this readout. Obviously, there's no, a lot of details, but what can we glean from it in terms of what's really changed in terms of the vision for the next 5 years for China?
Well, I think there's a continuation of what has been decided for the 14th five-year plan. So I think that the Grand Master Plan is largely going down the same path. But I think a few highlights is worth noting. I think one is, as you mentioned, I think there's a lot of emphasis on self-reliance, on cutting-edge technology, on the competition for next-generation technology. And there's also, I think, increasing mentioning, probably not as much as some other people are hoping for, about the importance of integrated domestic market and the importance of boosting consumption demand in the domestic market in China. And then I think, as I have been predicting, I think there's increasing mentioning of the sustainable growth, the more inclusive growth, the provision of better social welfare programs in the next 5-year plan.
And joining Professor David here. So this reappearance or the re-emphasis on advanced manufacturing, do you think that is implicitly elevating the role of exports and external demand as again an important driver for the economy, you think?
I think the increased export could be a derivative, or could be a consequence of the emphasis on advanced manufacturing, even though I do not think that is the main purpose of this is mentioning. I think this is like a continuation of the Made in China 2025 in trying to move China above the upper in the value chain, and trying to ensure China has the capability of both innovation and manufacturing and delivering the whole 9 yards with its comprehensive supply chain.
Does this put this whole, goal of rebalancing the economy, more into consumption? Does that take a step back now? Is that more of a secondary consideration now? Because a lot of economists are saying that there wasn't even a mention of even involution in this readout, that it doesn't seem like there's enough conviction to really kind of pull this economy out of deflation.
Well, I think that the readout is a very high-level policy that's coming out of the party meeting. So I think a lot of details will be coming out from the governmental meetings and the Central Economic Work Conference. So this is focusing on economy, even though the wording or the specific policies will not be as precise as what we would be hoping for or what we will be getting in a few months of time. So I don't think those two things are necessarily contradicting each other. And also, I think the goal, there is the emphasis on trying to ensure or improve the economic growth in general. So I think, in my view, it's more about there is emphasis on advanced manufacturing, but I wouldn't necessarily think this is ruling out the emphasis on domestic market and consumption growth at the same time.
Professor, just drawing also on your background in economics and consulting for many international firms, is there anything that foreign firms can glean from this in terms of what their future is in terms of this Chinese market, both as an end market and, of course, as also a manufacturing hub?
Yes, probably there are a few implications. One is I think China is still aiming at boosting its domestic market's growth. So I think given the size of the market, there is still quite a bit of potential for the foreign companies to do business in China and sell their products eventually in Chinese domestic market. The market is getting more evolutionized. The market is very competitive and not very easy to navigate. Those are all true. But then the potential of the market remains quite high for foreign companies. I think that's one takeaway. The second is, I think, how to be more competitive when they are operating in China. I think there is clearly some advancement in China's own capability and domestic self-reliance. So how would foreign players better integrate them into the domestic market, both for their eventual market in China or outside? And the last one is, I think, national security or the sensitivity of the sovereign ownership of the technology, I think becomes unavoidably clear in the document. So I think it is quite important for foreign companies to think harder about, well, where they are in, how they are perceived in their technology, or how they will be perceived in the future by the technological development in the next few years.
So from what you see right now, I mean, do you think, the growth target of around 5%, is that going to be a pretty, are we seeing a pretty solid path for that right now, Ning? And in terms of policy signals, what do you think could still come when it comes to the stimulus side of things?
Yes, I wouldn't be surprised that we will be seeing around the 5% growth target for the 15th five-year plan. And I think, after all, we need that to achieve the doubling income by 2035 goal, which was set by the 20th plenum. I think in terms of policy, yes, I think I would agree that we would be needing more aggressive monetary and fiscal stimulation to ensure the economy is growing at that path. And in that tone, I think we have to be more aggressive with trying to correct or reverse the deflationary expectation, which is hurting the economy in the long run. So I think that is something that the policymakers would have been working harder to turn around, to at least stabilize in the perception of the price levels.
Professor, before we let you go, one of the big events where you are in Shanghai was the Bund Summit. Our colleague Stephen Engel has been covering that for us. My understanding is you were there and you attended some of the sessions. What stood out to you there?
Well, I think there's a lot of discussion about, I think, what we have been discussing about the benefits of globalization. And there are some specific discussion about innovations such as stable coins and Web 3.0. I think in the meantime, I think people are still a little bit uncertain about what was going to come out of the summit meeting between President Xi and President Trump, and also how the future of globalization and the global collaboration, especially in the field of finance, will evolve in the next few years. So I think it's quite lively, but I think still full of uncertainty based on my observation.
Professor, thank you so much for the time. Have a great weekend ahead. Ning, Professor of Finance at Shanghai Jiao Tong University there. About 10 minutes to the opening bell, we're looking at tech platforms, semiconductors, hardware, software, on the back of some of the priorities set out in that readout there. And we are looking at initially, there we go. Yep. Quite a bit of upside right now, 1.4% on HS Tech, and we are now looking at, let me just go through some of the names here. As expected, Huang Semi 3%, Horizon Robotics 3%, SMIC up 2.25%, 1%. More on this in a moment. This is the China Show. Right, welcome back. Massive move in Intel post hours. Turnaround seems to be, there's a lot more meat on the bones there. It's playing out across Asia Pacific. Some of the shares and companies tied to Intel's fate moving up substantially in the likes of Japan, for example. Let's get more on this. In fact, let's get the Intel, why not? Bloomberg Intelligence senior semiconductor analyst Kunjan Sobhani in San Francisco for us. Kunjan, first, thank you so much for joining the show today. What stood out to you, sir?
Yeah, I mean, today seems to mark a start of a fundamental true turnaround that we have been hoping or really wanting to see from Intel in a while. I know the stocks had rallied over the last 2 months, but most of that upside was driven by the deals like the US government and NVIDIA and the SoftBank investment, which helps in the long-term tailwinds, but doesn't do much in near term. But the results they showed today, a good beat in 3Q, even though the 4Q seemed like a slight miss, it was because consensus had Altera revenues baked in, which they should not have had. So if you adjust for the Altera business exit, they seem to have delivered a good guidance as well. Along with that, more micro things, progress on 18A, them running on supply constraint on the 10 and 7, and 18A coming up in Arizona, which structurally has a better cost advantage. All of these steps seem to be moving in the right direction. Fundamentally, even the gross margin trajectory as well as OPEX discipline that they have shown and what we expect in 26. So we think finally things are turning around for them. It will still require some patience, and execution like today we saw would be key to be consistently delivered at least for the next year.
Yeah, so certainly a comeback is underway, Kunjan. I'm just wondering, in terms of, can they still manufacture products that attract customers again, right? It seems like they've been struggling to capitalize on this surge in AI. What more can they do on that front?
I think at this point it's just a wait and watch game. I don't think they can do anything immediately to show us that they can start manufacturing sort of next quarter. These things do take time. I think as they keep on showing quarter after quarter, 18A yields improving, 18A cost structure improving, and them running more capacity on 18A, showing gross margin improvements surrounding that should build confidence in the customers who are also evaluating, like us, on how they're doing on 18A, because that is sort of their workhorse and their proving grounds of whether they could be a third-party foundry supplier for a node like a 14A.
Kunjan, thank you so much. Kunjan Sobhani there, our senior semiconductor analyst at Bloomberg Intelligence, that keeps us in the tech theme here going into the open today. Substantial move on the HS Tech early on, and as you can see, it's green across your screens and a lot of green. I'm curious to see what southbound flows will look like given this dip today and the comeback of momentum. Lenovo, as you can see on your screens as well, 2%, and Huang Semi and some of the sort of self-reliance, robotics, and some of the key priorities there out of the Ford plenum readout.
Yeah, Macquarie had a good note that came out yesterday, late last night as well, talking about, look, it's import substitution names that may gain on this whole China tech push. So it's not just the Intel story, but also what we heard from the plenum as well. So plenty of reasons to maybe be a bit long when it comes to the tech space here this morning as we wrap up this trading week. And of course, as we count down to that APEC summit between President Trump and Xi, that meeting, you can circle your calendars, next Thursday is happening in South Korea. You're watching the China Show. The Open is next. This is Bloomberg.
Welcome back. You're watching the China Show, counting down to the open of markets, and it's a good approach. It's a solid approach. Well, we've yet to see what volumes look like, because volumes overnight in U.S. listings in the U.S., while they did extremely well, volumes were not quite there. But that could change. We'll see what southbound flows look like going into this open today.
Yeah, we're still looking on track. Pretty solid footing here in terms of wrapping up the trading week, and we look to snap 2 weeks of losses already. So really the optimism around tech, this rebound seems to be underway once again, right? We talked about the moment that we heard about that date, that when Trump and Xi are going to meet next week, that was enough to kind of reinvigorate the animal spirits once again.
Are you more excited with your trip coming up?
I am. Yeah. I was excited before. I'm even more excited that it's actually happening, right? So yes, tune in to China Show next week. I'm going to be there in Gyeongju. But yeah, you take a look at when it comes to the plenum as well. I mean, that readout had such an emphasis when it came to tech that maybe there is a bit more to chew on there when it comes to this whole HS Tech rally as well. So there you go. CSI 300 is doing this here right now. We're out 0.4%. The tech space, as you can see, right, the big names like CATL, Capricorn Tech is doing quite well. Capricorn is up some 2%. Still following that movement when it comes to oil prices, as Dave mentioned here. We're still seeing a bit of elevation when it comes to that price here after what we heard about U.S. sanctions on Russian firms this week as well. Flip the boards and we'll see how the rest of the tech space is doing in Hong Kong. There you go. We're up 1% for HS Tech. Hang Seng, we're punching around 2 to 3% gains for the week already. So this is looking to be a pretty solid session here right now on this Friday morning. Take a look at Alibaba. We're up some 2% here. HSBC seems to be heading the opposite direction. But when it comes to the HS Tech space, there you go. We mentioned most are which are in the green. right now. I'm looking at my MOV on my terminal. There you go. 28 are up, 2 are down here. The EV space, like Jiao and NIO, are the only ones that are in the red. But it's the chip space. Huang Semi, that is the leader of the board here today. We're up some 3% on some of these chip names as well. SMIC is also doing very well. There you go. So HS Tech, that's really what we're seeing in that space. This is where really investors are tilting towards, and given this readout. The consumption space, we did hear some, at least, acknowledgement of the need to build up the domestic market and the like. So, whether that actually helps, some economist says that it was a bit lacking in terms of details there on that readout. But we're watching also earnings from Prada as well, right? Miu Miu did very well, but they're still dealing with the core brand Prada that is still looking not as strong. So there you go. Sales at least rising there, boosting hopes of recovery in the luxury sector. We're up 5% for Prada here today. Yeah.
Miu Miu to the rescue. Okay, let's have a closer look at this readout. And of course, in about 30 minutes time, we'll be getting the briefing, so perhaps more context there. But so Goldman Sachs had this, they did a word count analysis of some of the sort of key takeaways that emerged. So tech, consumption, risk control, decreased reform and opening up. In terms of what remained largely present, things like people's livelihood and employment. So what does that mean in as far as investment strategy is concerned? So we've already seen market reaction in tech, chips, for example. Green energy is also one thing to watch as well. Let's bring in Charlotte Yang, our Asia equities reporter here, to talk us through what your team was thinking looking at this readout going into today.
Yeah, so overall, it meets investors' expectations, but the top theme that really stands out, one, as you mentioned, is tech. This emphasis about building stronger industries, also boosting innovation, as well as tech self-reliance. And this has translated into the sectors that, for example, from hard tech, semiconductors, the chip makers, to the software side, and also as well anything that's related to AI, as well as green tech. I think a lot of these stocks are already not that cheap. But I think this is a 5-year development plan. There's a long-term structural growth story there. So that's really helped boost investor sentiment. But also, we'll be watching out for the more detailed a statement that comes out later this month. And another sector I think investors are focusing on, as you mentioned, is consumption. Even though there isn't that much of a anything that's like really surprising, I think investors like to see that there's this emphasis about boosting social security, welfare, and also investing in the people. Something investors might not like is the lack of mentioning of anti-evolution. This popular phrase. There was a lot of focus on, for example, solar, those sectors that was facing problems with overcapacity. So yes, and property there's also mention. There's a mention this time versus last time there was no mention at all. So that's also a positive sign.
So given what we've heard from analysts and the like, do they feel like this is enough for Chinese markets to continue this rally? How are we looking at as we count down to the rest of the year?
So I think for this one, no bad surprise is also good. Yeah. I mean, overall, it's extending the current directions, right? Whether that's with tech or with boosting domestic market. And also now you have the market's focus right now is definitely shifting to the Trump and Xi talk, because right now what you need is clearing those trade uncertainties. And a lot of the moves earlier about U.S. China, tit for tat, those restrictive measures, people were perceiving it more as a tactical play ahead of the talk. But if that's not tactical but more structural, I think that could be a headwind for the broader market.
All right, Charlotte, thank you. Charlotte Yang there, our Asia equities reporter, on some of the main themes and what investors are really kind of looking at here in terms of the readout. So certainly that's one thing to watch. Let's talk about overall just broad markets and bring in our MLI strategist, Mark Cranfield. He joins us from Singapore this morning. Mark, it's great to have you. It seems like everything's back up again after what has been a few days of where momentum has been sapped. Do you think that we can sustain this sort of rebound?
Yeah, at least until we hear that the President Xi Donald Trump meeting is cancelled again. And we've got plenty of time for that meeting to be on, off, on. I mean, who knows? But anyway, for now, yeah, great. We look as though we're going to have a meeting next Thursday, and for the time being, it looks as though investors can expect at least a mildly positive meeting between the two, but who really knows, because there's so much that can happen in between there. From the Chinese market point of view, importantly, there was nothing really surprising, as Charlotte was explaining earlier there's nothing really surprising in the readout from this 5-year plan. But the key change really here is that what investors have seen really since China started doing the big stimulus measures, which began in the fourth quarter of last year, is that finally the Chinese government is allowing tech companies to be innovative and to make money, and generally providing positive sound bites and help in that direction. Now that's a massive contrast to what we saw during the COVID zero period, when foreign investors really got scared of Chinese markets because what they saw was unhelpful interference, specific people in the tech sector being targeted, some companies being blocked from doing what they do best. That has changed completely, and as long as international investors, and Chinese investors for that matter, as long as they see the Chinese government and authorities generally being supportive of their own companies and their own markets, that's a very good thing. So as long as companies can get on with making money and innovating, that's all that equity markets need to see, and that appears to be the general consensus coming out of this 5-year plan. So just keep doing what they've been doing for the past few months, equity markets will be happy. The icing on the cake for that would be that the US and China find another reason to be friendly, not to impose new tariffs on one another, and generally just allow the situation to be pretty much as it has been since April. Since the Liberation Day, everyone got over that, started to put things back together, and since then generally things have been pretty good. Equity investors would like to see more of the same. Thank you very much.
Okay, Mark, can I ask you about Korea? You've been writing about that in today's blog. I mean, clearly this market's been head and shoulders above pretty much every other market this year. Was there anything from the BOK that bolsters the bull case further for Korea? How do I look at this market now?
Yeah, from the Bank of Korea's point of view, it's pretty clear the door is still open to further interest rate easing. They didn't hide that from anybody. I think that's the general interpretation. It doesn't mean to say there's a rate cut coming immediately, but certainly their bias is towards looking for more opportunities to lower interest rates, which is generally in line with what we're seeing from most people in Asia. Federal Reserve is going that way. Asian countries would like to be able to ease a bit more as soon as they can. The unusual situation, a lot of people have been talking about, why is the Korean won weakening and yet the Kospi is so strong? You have a very unusual situation in Korea where investors are actually paid to do their currency hedging. So if you're a foreign investor looking at Korea, you can sell the Korean won on a 1-year outright basis without incurring any cost, which is pretty unusual. And that means that you have a natural currency hedge against the Kospi. So if there's a sudden turnaround in the situation, at least you've got some currency protection in place, and it's not costing you anything to do so. Of course, the worst case scenario is that we have another fallout like we had in April, markets go into a tailspin, dollar goes much weaker because people are selling the American theme, and stock markets go down at the same time. But that's pretty unusual, doesn't happen very often. So for the time being, you have a great scenario. If you want to put money into Korea, stocks are looking positive, and you can hedge the currency with no risk.
Fantastic, Mark. Thank you so much. Mark Cranfield in Singapore for us, our MLife strategist. And there is, of course, one entry in the blog today that inverted currency curve is really part of the ongoing coverage of today's market comeback, the rebound in the bull case today. There we go, coming out of Mark Cranfield. A little bit further below, I think the copper entry is Mark's comment there. Anyway, check it out, MLive, we go on your Bloomberg terminal. Welcome back. You're watching The China Show. An advisor to the PBOC says Beijing needs to take major steps to stabilize the property market to really begin turning around weak economic indicators. Speaking to us at the Bund Summit in Shanghai, Huang said that the uncertainty around the Trump trade war is also hurting China's business outlook.
Well, I think on the one hand, when you mentioned about the tariffs, we don't really have a number yet. But what happened during the last 6 months really damaged the confidence of the enterprises. Like the numbers ranges from probably 145 to somewhere like 30, 40%, and then mentioned 100%. I think for the businesses, this basically means policy uncertainty. You don't know what is going to happen. And that, I think, is affecting negatively your investment, your employment, and also show in manufacturing PMI numbers. So I think we don't yet have an agreement, but the uncertainty is very, very damaging to macroeconomy.
It hasn't necessarily been reflected in the latest quarterly GDP results. Why is that? And,
well,
yeah.
Well, the third quarter GDP numbers might already reflect some of it, but the second quarter number is quite clear. GDP numbers are still 5.2%, and you look at, for instance, production, exports, consumption, they're resilient, and that's why GDP numbers are okay. But if you look at another set of numbers, the inflation rate, which was very sluggish, you look at the PMI, which was below 50, and private sector investment, and also the migrant workers' unemployment rate. These numbers, to me, all suggest that the confidence level is low, and the businesses just don't know what is going to happen.
You contributed to an article in September about needing more fiscal support for the housing market.
Yeah.
I assume you still believe that. So what kind of shorter-term policy stimulus would you recommend?
What we really need is for the government, including the central bank, to do something major to repair the balance sheet of household, of the enterprises, of the local governments, and maybe also of the financial institutions. They need to be recapitalized in order to expand their lending businesses.
So what would that major step be? I mean, recapitalization of the banks, and what else? How do you recapitalize the households if they're holding on to those savings?
For the household, I think the key thing is if we can try to do something to stabilize the property market, that will take us a big step forward. But also for the local government, I think we needed to be aggressive in easing the fiscal policy, but really trying to provide more money for the local government to spend. At the moment, the central government is like expanding by these special government bonds, long-term government bonds, and so on. A lot of them requires important conditions for the local government to use it. So the pace of dispatchment of this money is not very rapid.
PBOC advisor Huang they're speaking to our very own Stephen Engel at the Bund Summit in Shanghai. Now, in some other global news this morning, French President Emmanuel Macron has told EU leaders that they need to consider using all available options against China to resolve Beijing's planned export controls on rare earths. This includes using the bloc's most powerful trade tool, known as the anti-coercion instrument. The European Commission is currently working on options if a diplomatic solution with China is not found. Japan's new trade minister, Ryosei Akazawa, is warning that China's rare earth export controls could be used to slam the brakes on Japan's car-making industry. He says Beijing controls nearly all of the elements needed for magnets used in car motors and steering systems. He's suggesting that Japan may need to find alternatives for the minerals or ensure supplies from allied nations. Bloomberg has learned that the Trump administration is in early-stage conversations with quantum computing companies on potential financial support. Sources say the Commerce Department has discussed the potential use of the CHIPS Act funds to back projects and companies critical to national security. We're told the administration would seek something in exchange for any financial support. And the FBI has arrested NBA player Terry Rozier and coach Chauncey Billups in two separate illegal betting schemes. Now, prosecutors say Rozier of the Miami Heat wagered using non-public NBA information. Billups, the head coach of the Portland Trail Blazers, faces charges in a case tied to rigged poker games allegedly run by New York mafia families.
Okay, coming up, let's use that. Arrested no more. Binance co-founder Changpeng Zhao CZ is the latest crypto entrepreneur to be pardoned by President Trump. We assess the impact on the crypto industry coming up. This is Bloomberg.
Well, we're checking crypto markets here this morning, and certainly we did see a big move when it came to this news here, right? We're talking about the Binance coin.
Yeah.
We saw a bit of a pop there on the back of what President Trump did, right? Pardoning Binance co-founder Jiao, one of his biggest moves yet to fully embrace the crypto industry and give legal reprieves to some of its most prominent people. Trump says he pardoned Jiao at the request of, quote, a lot of good people, although he has never met him. Let's get to our cryptocurrency reporter, Subhashi Ghosh. She's with us here right now. There's been a lot of talk about this. Tell us a little bit more about the backstory, right? The connection between Binance, CZ, and the Trump family crypto ventures.
Hey, Yvonne. Yeah, exactly. So first, I would like to say, as you're mentioning, this is one of the most high-profile pardons by President Trump in the crypto industry. It was kind of a little bit expected as well, but still it's a big news. We've seen the Binance-related token surge more than 8% overnight after that news. So yes, it's a big important information that's coming through now. Regarding the connection, as Bloomberg News has reported before that, that Binance and CZ, Changpeng Zhao is well known as CZ in the crypto world. So CZ, Binance, and the Trump family members have been kind of related, interconnected through their crypto ventures. One of them being a project called World Liberty Financial. It is a decentralized finance protocol, which is linked to the Trump family members, including President Trump's sons, and also President Trump himself is a co-founder emeritus there. So what is happening between the connections over there is Binance, we have reported that Binance helped in writing the code that underpinned this World Liberty Financial project stablecoin called USD1. And subsequently, this USD1 stablecoin was used as a mode of payment by a Abu Dhabi-based investment firm called MGX to buy into a stake of worth $2 billion into Binance. So we can see, if you can join the dots, we can see the connections between the co-founder of Binance, which is CZ, Binance, and this Trump family related connected crypto venture. We've also reported, Bloomberg News has also reported that after CZ, came out of his, completed his prison sentence last year, he met President Trump's, U.S. Middle East envoy, who is also the co-founder of this World Liberty Financial project company, Steve Witkoff. He met him after his release from jail. So, in a way, if you join the dots, you can see the connections, the backstory that you are asking about, Yvonne.
Now, Subhashi, specifically for Binance, what does this have any implication in terms of the business outlook for the company?
Yeah, it's an interesting question, David, and indeed it does, according to several experts. The reason being, number one is Binance is even after when CZ and Binance was indicted, and they pled guilty for the charges there on anti-money laundering and U.S. sanction violations. Even after that, CZ had stepped down as the CEO of Binance, but he still is a controlling shareholder in the company, in Binance. So what has happened is that in crypto we call it as an ultimate beneficial owner. He's still the UBO of the company, and when Binance being the largest crypto exchange, it wants to grow faster. It wants to grow across the world, and because user base is required for a fast-growing crypto exchange. To grow into new economies, new geographies, you need regulatory approvals. And for regulatory approvals, you need, typically regulators look at the UBO. And if the UBO has been, charged by the US, then it really has some implications in terms of getting those approvals to expand into other countries. In that sense, this clears Binance from and help, because the UBO's name is cleared, CZ's name is cleared now.
Right.
It could potentially help Binance to speed up its expansion into other countries, including Binance.us in the US.
Right.
Okay. Thank you so much. I think I'm a bit more confused than we started things off with. Anyway, multifaceted, multi-elemented, that story there. Subhashri Ghosh, thank you so much, cryptocurrency reporter in Singapore, unpacking really the ties and the likely implications for Binance. Just a quick glance at markets, 25 minutes. We're about 0.7 to 1% in between, of course, the three main benchmarks. Tech is leading the way, as you can see, top row, leftmost side. We are also continuing to see the 30-year yield hovering near these one-month lows. The starboard, small caps up about 2%. Very quickly, Meituan is one of the very few red spots, well, weak spots rather, red is up in China, across the HS Tech Index, down about 1.2 there. Dim sum bond sale coming through, and mainland semiconductor stocks are coming up as well very, very shortly. There we go. Cambricon all the way to SMIC doing very well. Plenty more ahead, lots more on the way. This is the China Show.
Welcome back to the China Show. Happy Friday. We're just a half hour to the session at the HSI, and we continue to see some decent gains when it comes to this market. We're up 0.6%. HS Tech certainly is driving a lot of that here this morning. There was the plenum readout that certainly did focus and double down when it comes to manufacturing, advanced high tech, and the like. And then you have, of course, next Thursday, which has been confirmed, where the Presidents Xi and Trump will be meeting. So, yes, it looks like it's going to be a good day when it comes to be long risk assets here. But, yes, there's still a lot to deal with, right, on what could come out of South Korea, right? Is it going to be likely the grand bargain and grand kind of trade deal that Trump has talked about weeks ago? It seems like his need for kind of quick wins means that maybe it could be just simply just dial down tensions. That could be maybe the best case scenario that comes out.
And that could be a good thing, right?
Yeah.
And if we get any indication this time next week, and I imagine that's going to be an absolutely manic 12 hours, that Thursday evening going into the Friday morning in terms of the news cycle.
Yeah.
Right? Are we going to hear from the U.S. side? Are we going to hear from the Beijing side? Are we going to get any indication of a potential or maybe cemented visit to Beijing from the U.S. side? So lots of things to consider. The other thing to point out is around that time is we had the BOJ, the Fed, and everything else also taking place. So that's also quite a big risk event for markets. We're coming off one of the best days for Brent yesterday, 5% to the upside. That's down to the Russia-India story. We're hovering and just slightly below the cutoff today. Gold is on track for the first weekly loss in about 10 weeks or so. Silver futures are also down quite a bit, so we're well below the $50 mark there. FX markets, we'll talk more about this later in terms of the CPI print coming out of Japan, core CPI on the hotter side of things, but the yen is trading as if the BOJ is not going to do anything about it next week. Perhaps December is what our call from the Bloomberg economics folks are talking about here. Now, going back into the plenum and the readout there, and you're seeing on your screens the big initial winners based on what the markets are doing and acting on, everything from Huang Semi and Horizon Robotics up and all up substantially in the first 30 minutes of trade.
Yeah, so everything from hardware, software, import substitution. I mean, it runs a gamut here, really, on what could be beneficiaries of this plenum readout here. So certainly that's one thing. We have these live pictures that are happening right now here. This is the press briefing on the topic, of course, of this fourth plenary session of the 20th CPC Central Committee. So we'll see if we hear any more details on what really came through here in this week-long meeting and really what investors can really glean into here. But it seems like there is this doubling down really on this growth model of really focusing on the export side of things and manufacturing.
Yeah, Min Min Lo has been poring over that readout for us. She's in Shanghai covering the story for us. So Min Min, while we wait for more context from officials in Beijing, just to you, what stood out to you from the readout?
Yes, there were really two big buckets in terms of priorities, right? One is the tech self-reliance and the other is consumption. So when it comes to tech, the readout had highlighted some of the big commanding heights of science and tech, areas that the government wants to focus on, not just on chips and AI, but also aviation, transportation, and internet. And this is something, as the government doubles down on advanced manufacturing as a backbone, that's something that could continue to be a sticking point with other other countries that have accused China of dumping its overcapacity on other countries. But consumption also another big focus. It was mentioned 4 times in this communique compared to just once back in 2020. So that shows you that the intention is clear from the government that they do want to increase the share of consumption in a GDP. It's 40% last year, but this has been a really difficult task, right? We have seen about 30 months of deflation so far, and some analysts are saying that the language perhaps is still not strong enough, with words like anti-involution being omitted in the communique, and some are saying maybe that shows that the determination is still not there. Although other analysts are saying that, you know what, this is a broad policy document. The details of the blueprint may not necessarily be fleshed out until the Central Economic Work Conference in December or the government work report in March. So it doesn't necessarily contradict with the broad intention to boost consumption. And Nomura, for example, is saying that this is going to be a long-term goal, even if in the short term we might not expect any big stimulus, given that China is already on track to meet the growth target this year.
Yeah, so it seems like this, at least there's a readout. There is a framework of what is ahead in terms of the vision for China the next 5 years. Do you think this gives Xi Jinping a bit of more political capital now, leading up to this APEC summit and meeting with President Trump?
Well, I think so far, if you look at the trade data, it shows you that exports have been holding up very well and that Chinese exporters have been very nimble, right? But I think the task to boost consumption has been very challenging for China so far. And the other thing that is concerning is if you look at China's plenum communique, it still shows you that improving people's livelihood, that's still pretty low in the priority. And it's interesting if you look at what Goldman Sachs have done when they crunched the numbers and the word analysis of the communique. It shows you that things like employment, people's livelihood, the word count for that remains stable, even as there's increased mentions of things like tech and consumption. So if people's livelihoods are not better, their incomes are not being increased, it's going to affect how much they're going to spend. It seems like China is still focusing more on the supply side reforms, perhaps more market deregulation, more policy support and incentives for businesses to promote certain types of consumptions. And that is where I think some analysts are concerned that maybe not enough is being done to really address some of the structural issues in the economy.
Yeah, well, there's a several hundred-page readout due in March. Might have some details on that. Min, thank you so much. We can wait for that. Min Lo, our China correspondent in Shanghai for us. Now, another top story we're tracking this morning is, so as we were just talking about there with Yvonne, the White House has confirmed that Thursday next week is the day to watch. President Trump will meet President Xi Jinping on the sidelines of the APEC summit. Our Chief North Asia correspondent, Stephen Engel, explains what's at stake and the potential stumbling blocks ahead.
After more than 6 years, Presidents Trump and Xi plan to meet face-to-face in South Korea at a time of significant economic friction between the world's 2 largest economies. While their respective teams have held direct trade talks, the opportunity for Xi and Trump to hammer out at least some of their differences in person could be the catalyst towards more stable ties. Or not. For sure, the leverage game is in full swing. Earlier this month, Beijing announced a new round of export controls on rare earth minerals, vital inputs for a range of high-value industries, including advanced electronics and military systems, adding intensified uncertainty for global manufacturers, not just in the U.S., but Europe as well.
Most countries know this is not particularly targeted on them. It is mainly a retaliation to the U.S. moves on China. So if these countries, they handle relations with China, especially trade and economic relations with China well, without assisting the U.S. in sanctioning China, in pursuing the export control of China, I think, they don't have to worry about this.
Now, while the Europeans weigh their response, Trump is threatening to hike tariffs on China to 155% from November 1st.
But China's been very rough with us over the years.
The U.S., citing national security, has implemented its own export controls, restricting China's access to high-end semiconductors and the equipment to make them, particularly those used for artificial intelligence. The result? An accelerated push by both nations for greater self-sufficiency and/or an increased reliance on or through other key trading partners, from critical components to strategic crops. China's buying the bulk of its soybean imports this year from South America instead of the U.S. And Trump has now struck a deal with Australia for rare earth. Underlying these economic issues are the geopolitical risks in the Asia-Pacific. Potential heightened military activity, particularly around Taiwan, would no doubt disrupt shipping lanes and supply chains.
I think when we finish our meetings in South Korea, China and I will have a really fair and really great trade deal together. I want to be good to China. I love my relationship with President Xi.
China's position on handling China-U.S. economic and trade issues has been consistent and clear. Trade wars and tariff wars have no winners and are not in the interest of either party. Both sides should resolve relevant issues through consultations based on equality, mutual respect, and mutual benefit.
For global business, the primary expectation for this on-again, off-again Trump-Xi meeting is less about finding a single comprehensive deal between the two countries, but more as an opportunity to seek at least a step towards de-escalation. Stephen Engel, Bloomberg News, Shanghai.
All right, we are, of course, still waiting for any more details that come through in this press briefing between Chinese officials after releasing that fourth plenum communique. But yes, continue to see this one here as a reason to really continue to add to gains in this equity market in China, right? Continue to see the tech space doing quite well here today. We'll bring you more details once we get more. Plenty more ahead. This is Bloomberg.
Right, welcome back. Equity markets are back on track following the wobble in some of the momentum factors this week. But let's see how long this lasts because we're going into quite a big window of risk going into next week. Geopolitics, and we just talked about there the Fed, and they're likely going to cut interest rates. But yes, equity markets have done exceptionally well this year. Joining us now from Sydney, Junbei Liu, co-founder and lead portfolio manager at KenCap. Junbei, good morning from Hong Kong. Thanks for joining us, and happy Friday, by the way. So, I mean, equity markets have done well. Inflation looks like it's behaving itself. It looks like rates are going to come down. So I guess my question is, what's not to like in equities, and what's the risk we don't see then?
Yeah, absolutely. Well, thank you so much for having me. Happy Friday. Good afternoon from Australia. And look, it's equity market. You're absolutely right. The fundamental of equity market is pretty strong. So, like you said, everything's trending the right way. At the same time, we still have that underlying structural shift into the AI and AI-enabled sectors and everything else to drive efficiency. And there's a lot more to come. So all of that looks incredibly strong. Now, of course, usually seasonally, if we talk about September, October, it is seasonally a little bit more volatile. We might see a bit of thing, but so far, actually, we've gone through pretty well. And into December usually is a much stronger seasonality. So everything looks pretty good. Look at the tail risk. There's always a lot of tail risk these days. We do have a lot of geopolitical risks. We have the trade negotiation that might, to and fro will take quite some time to come through, or whether we will get to the final outcome if within the next 12 months. So it will be a long negotiation, and to and fro, we may have bit of profit taking. Markets done well, particularly China market, some of the Asian markets done incredibly well. You might see a bit of profit taking. I think some have already pointed at the China market that the valuation is already slightly above the long run average. So the valuation support is not 100% there. We do think you'll run a little bit further, but it just you're hitting to a bit of resistance. Just potentially with any sort of headline might be a bit of profit taking. However, taking a step back, we do think the fundamental for overall equity market look pretty good.
So is that a good environment to buy the dip? Is that still the mentality to go on any sort of pullback or retreat that we see in these markets? What have you been doing for the past few weeks?
Yeah, definitely buying the dip. So, every market has its own unique sectors that sort of has been underperforming. So, putting the valuation aside, some of the sectors does look expensive, just a little bit cautious. We like the cyclical sectors for benefiting from the falling interest rates, whether it's your property sector, not so much China. China is slightly different. Put that aside, the rest of Asia. We do like the interest rate beneficiaries, the cyclical, the retail, the consumer-oriented sectors, all very, very strong. So we love that kind of exposure. You absolutely buy on the dip because we know there's a lot more interest rate cut to come through, and that's where you want to go. Now, with the China market is actually very, very interesting. We are seeing the property market is continue to be pretty weak, but I think in general, the market itself, fundamentally, you will see more retail participation and retail investors buying the dip because, quite frankly, there's not that many other asset classes that that looks great for them to invest into. So there is that sort of pent-up demand for that kind of for that sort of buy the dip mentality. So yeah, absolutely. If you see the volatility, that's where you go.
When do we start entertaining the possibility? Let me phrase that more carefully. Entertaining the possibility of a possible rotation into some of the more cyclical names in China, because those ones have been really unloved and, for good reason when you look at where the economy is. And I wonder whether or not that is closer than people think, out of tech and into the sort of value cyclical names in China.
I think in China it's very, very interesting. So I will be, continue to hold part of the growth part of the market because that is still quite newly discovered for investor base because the AI trend will continue. That will be a lot of investment. I will be still sitting in there. But the cyclical part, there's pockets looking very interesting now. The consumer I know is still being very, very tough. But I think heading into next year, we should start see some rebound given that easier comps and the like. So I will be looking into those space, and also given the share market's done well, the bit of wealth effect to come through. So into 2026, at end of this year, I'll be looking to move some of it. But look, I think as a part of the portfolio, you always have, especially towards China, you always have that kind of AI bent to the tech growth exposure because now, after all, it's like the second largest most advanced, economy that has that sort of AI development just after the US. So, so I think it's very exciting.
Junpei, I know you cover mostly equities, but I'm wondering what you're seeing in terms of other asset classes, in particular, the wobbles that we're seeing in gold, for example, the last few weeks, crypto, even the liquidations that we saw a few weeks ago, even credit, right? What do those sort of volatile days and events tell you? Do you think equities are vulnerable in any way to any of those event risks out there, and even just what we're seeing in other asset classes?
Yeah, that's a really, really good question. Actually, recently we just went to New York. We met up with all the banks and asset owners just post the third quarter results, and we're getting a lot of insight. So I do think that a stronger equity market, with the asset class will be correlated. So we think the fixed income, is doing okay, but equity market will absolutely give you a lot more return on top of that. The credit space is very interesting. Clearly, we recently had a couple of hiccup in the US because of fraud. We'll look what it looks like, fraud. But I do think that private credit market is more isolated incidents. So there is still a lot of growth to come, just a little bit more oversight. Regulators that have never really paid too much attention to it, just be more oversight. So I think that all the asset classes are actually looking reasonable. Gold, I actually think gold and crypto, they both look like they have a good place in the portfolio. So recent pullback, I actually think it's good buying opportunity. And the gold itself, I think if you look at the gold equity, they still come earnings upgrade. So you will be buying some of them on this pullback. Because of the fixed income and equity have such a high correlation these days, you do need to have other assets. That's why people buying gold, buying the crypto, just really to diversify from everything else.
In this kind of environment where everything is going up, is it more difficult for you guys that manage money to outperform? Is this a more, everybody's happy beta play market?
Look, it's for active manager like ourselves, we love that kind of market because, market sentiment can change. There's volatility, but it goes higher. So if you pick the right stock, you do better than the market, and that's what we do. So, active managers does really well in this market, passive is where there is a bit of challenge. You can have volatility and others. So, this sort of market, we do love.
Junbei, thank you, Junbei Liu there, co-founder and lead portfolio manager at 10Cap, joining us out of Sydney here. We're watching, of course, these markets in Greater China, and this is what we're looking like here. So it looks like Shenzhen continues to have a field day, really, after yesterday. Those news that we saw about, really strengthening the stock market, and, wanting to see some more M&A in that space. So there you go. Chinex is up some 2% as well. The Innovation Board is also up some 3% here. And tech, there you go, continues to perform quite well. We're up 1.5% here this morning. The flip side of things, when you take a look at value, look at dividends, maybe that's taking a bit of a step back today. Yeah, the rotation back into the winners just from earlier this week, right? How quickly mindsets can change. Just back to this ongoing briefing in Beijing after releasing the fourth plenum communique and some of the lines that have come through so far. Not a lot, but some of the more material ones. Just to mention, this is, by the way, the Han Wenxiu speaking in Beijing, and they're looking to increase soft power over the next 5 years or so. Let's listen in.
Cultivation, quality improvement, and the foundation enforcement. Consolidation and upgrade means to upgrade traditional industries. The traditional industries are the underlying base of China's industrial system. It accounts for about 80% of added value in the manufacturing sector. The recommendations propose upgrading key industries, consolidating and strengthening the standing and global competitiveness of our chemical industry, machinery and shipmaking sectors, and develop advanced manufacturing clusters. This will accelerate the transition from an accumulation of quantity to an upgrade of quality. Our initial estimation is that in the next 5 years, there will be a more than 10 trillion yuan market space. Innovation and create more benefits to the people and society. Innovation cultivation is to foster emerging industries and future industries. In 2024, the three new economies accounted for more than 18% of China's GDP. The recommendations proposed the cluster development of strategic emerging industries, including new energy, new materials, aviation and aerospace, and low-altitude economy. This will give rise to several trillion yuan level or even larger-scale markets. The recommendation also proposed making forward-looking plans for future industries and foster new growth, economic growth points, like quantum technology, biomanufacturing, hydrogen energy and nuclear fusion energy, brain-computer interface, embodied intelligence, sixth-generation mobile communication, and others. These industries are ready to take off. It means that in the next 10 years, we will build another or even several more high-tech industries in China. And this will inject continuous impetus to our efforts to achieve Chinese modernization. Quality improvement means to promote high-quality, efficient development of the services sector. There is huge space for this to happen in the services sector. The recommendations proposed proposed expanding the capacity and upgrading the quality of the services sector, and better integrating modern services with advanced manufacturing and modern agriculture. This will speed up the reshaping of economic ecology and better meet the needs of the people for a better life. It has opened up new space for economic growth, yet another enormous market in China. Foundation reinforcement means to build a modernized infrastructure system. China already has the world's biggest infrastructure network of high-speed rail, expressways, ports, postal delivery, electricity, and broadband connection. The recommendation proposed strengthening the coordination and plans of infrastructure development and front-load the building of new type of infrastructure as appropriate and improve the system of modern modern, comprehensive transport. We will also better leverage the development of Belt and Road Initiative to ensure that infrastructure will play a strong supporting role for our development. Second, we will build a robust domestic market. The economies of major countries are all driven by domestic demand, and the market is the most scarce resource in today's world. A strong domestic demand is a strategic underpinning for Chinese modernization. The recommendation proposed expanding the domestic market as our strategic base. In order to achieve that, we will focus on three key areas. First, expand the increased market. We will focus on both boosting domestic demand and consumption, and invest both in human capital and physical asset. We will seek upgrade in the consumption of goods and services, and increase the participation of private sector in the major project development. Second, increasing the efficiency. The expansion of consumption will continue to drive the Chinese economy in an upward trend. Second, increase in efficiency. The fixed asset investment in China has exceeded 50 trillion yuan. But the task of benefiting the people, showing up weak links, and fostering driving force remains arduous. Particularly, it is important to spend government funds at the most needed areas and on the life of the people. To this end, the recommendations proposed improving the structure of government investment, increasing the investment ratio in livelihood-related fields, and better use all kinds of government investments, so as to ensure full process management of government investment. The leverage role of government investment will increase the efficiency of overall investment. Third, land distribution. The recommendation proposed strengthening the strategic implementation of the functioning role of different regions and improve strategic industries and energy resource bases. Third, we'll focus on the new type of urbanization. We'll vigorously advance a new type of urbanization with people at its center, and vigorously upgrade the urban facilities. There will be enormous domestic demand unleashed from this effort. I give you an example. We expect to renovate more than 700,000 kilometers of underground pipelines and networks, and increase investment of more than 5 trillion yuan. Third, we will focus on the coordination of the land and the sea. China's marine economy has exceeded 10 trillion yuan. The recommendations propose strengthening the utilization and protection of the marine resources and strengthening the restoration of the maritime ecology and firmly safeguarding our maritime rights and security. This will enhance our efforts to build a better maritime future. In the future, the NDRC will act on the plans of the CPC Central Committee, deliver on the guiding principles of the recommendations, draw up an outline as soon as possible, so that this is a high-quality plan that meets the expectations and leads to the future. Thank you.
Thank you, Mr. Deng Shanjie. Now I will give the floor to Mr. Jing to brief you about science and technology and innovation. Friends from the press. My opening remarks.
Chinese officials, they're holding a briefing after releasing that fourth plenum communique. And what we heard so far is from, this was the NDRC chief, Deng Shanjie, talking about plans to boost support for new industries and to develop these new pillar industries in the next 5 years. Let's get more now from our China correspondent, Min Lo. And she's been listening in at this press briefing. What do we know so far, Min?
Yeah, I think right at the very top, the officials gave their assessment of the current situation and global environment, right? And they talk about how the world is undergoing profound changes and transformation that is unseen in a century, that the balance of power is being profoundly adjusted, and there are a lot of shifts, a lot of volatility and uncertainty, and China needs to turn this crisis into an opportunity. And once again, similar to what we had seen in the communique readout, the officials mentioned that the number one task of the party is China's industrial policy. And it's not just about focusing on technological innovation, it's also upgrading the old traditional industries and turning them into to more high-tech one. And he talked about, having to create more breakthroughs, especially in core technologies, and the upgrading of this traditional industry should create a 10 trillion market room for more opportunities. Not entirely clear how they come up to that 10 trillion number, but it's interesting. It looks like this is a major focus for the economy. Of course, consumption also another big focus. The officials talk about well-rounded common prosperity, increasing or improving people's livelihood, especially rural revitalization as well, increasing income for farmers and turning agriculture into a high-tech sector in the future.
All right, Min, thank you so much in Shanghai for us. From Shanghai, take you straight back to Beijing. This live briefing is still ongoing, and I believe we're going to listen in. And I believe we're now hearing about this the plan to increase technology and science. Let's listen in.
Of large high-tech manufacturing increased by 42% compared with the end of the 13th five-year plan period in AI, new energy, biotechnology, and other frontier areas. New growth drivers are in the making. Scientific innovation has made the skies bluer and water clearer, provided better health guarantee, and brought greater sense of happiness and gain for the people. Looking ahead for the next 5 years, the recommendations highlighted that Chinese modernization must rely on scientific modernization. During the 15th five-year plan period, we will seize the historic opportunities of the new round of technological revolution and industrial transformation to boost China's strengths in education, science and technology, and human resources in a well-coordinated manner, improve the overall performance of China's innovation system, raise our innovation capacity across the board, promote greater self-reliance and strength in science and technology, and steer the development of new quality productive forces. The recommendations laid out plans from 4 aspects. First, promote advances in the regional innovation and breakthroughs in core technologies in key fields. We will improve the new system for mobilizing resources nationwide. Adopt a whole-of-chain approach so that in integrated circuits, industrial machine tools, high-end instruments, and other key fields, decisive breakthroughs will be made. We will prioritize national strategic needs and deploy and implement a number of major national scientific tasks. We will strengthen the strategic, forward-looking, and systemic planning of basic research, and scale up long-term, stable support. We will prioritize original innovation in research and technological development, and produce more landmark, innovative outcomes. Second, promote greater synergy of technological and industrial innovation. We will develop national strategic scientific capabilities in a coordinated manner and enhance systemic capacity for technological breakthroughs. We will strengthen the guarantee of basic scientific conditions at home, improve regional innovation systems, move faster to effectively apply scientific outcomes, and better protect intellectual property rights. We will reinforce the principal role of enterprises in innovation, support enterprises in taking the initiative to form innovation consortium, and undertake more national tasks for technological breakthroughs. We will nurture leading high-tech enterprises, support new and high-tech businesses, and the development of scientific SMEs,
and increase the proportion of R&D expenses eligible for weighted deduction. We will nurture a culture of innovation and foster a globally competitive and open innovation ecology. Third, make synergized progress in education, science and technology, and talent. We will put in place a coordination mechanism for synchronized advances and promote greater synergy in planning, policy, resources, and evaluation. We will cultivate talent to meet the needs of scientific innovation, industrial innovation, and national strategies, and speed up efforts to build a contingent of personnel with expertise of strategic importance. We will highlight innovation capacity, quality, results, and contribution in evaluation, and deepen the reform of project review, institute assessment, talent evaluation, and income distribution. Fourth, advance the Digital China Initiative. We will develop an integrated digital market that is open, shared by all, and safe, and deepen the integration of real economy and digital economy. We will accelerate digital innovation in such fields as AI, ensure effective supply of computing resources, algorithm, and data. We will fully implement the AI Plus action to empower different sectors in an all-round manner. We believe that with our hard work in the following 5 years, China's scientific capabilities will be brought to a new high. And scientific innovation will steer the development of new quality productive forces and high quality development, providing stronger support to Chinese modernization. Thank you. Thank you, Mr. Yinhe Jun. Now I will give the floor to Mr. Wang Wentao to brief you about opening up during the 15th five-year plan period. Friends from the press, good morning. I will give a brief opening remarks on opening remarks. There is a specific chapter in the communique of the plenum on expanding higher standard opening up. It shows that the CPC Central Committee with Xi Jinping at its core attaches great importance to opening up and sends out the strong signal that China is committed to opening up and win-win cooperation. Let me share with you the following points. First, opening up is an important instrument to promote reform and development. Over the years, our reform and opening up has been mutually reinforcing. We have kept reducing barriers to the flow of factors at or beyond the border and steadily expanded institutional opening up. China leads the world in trading goods for 8 consecutive years, and its volume of trading services exceeded $1 trillion last year. We have completed, and China has been among the top 3 countries in terms of outbound investment. Higher standard opening up has become a robust driver for China's economic development. Second, opening up is a broad pathway to develop ourselves and contribute to the world. In 2024, China was the major trading partner of over 150 countries and regions. During the 14th five-year plan period, China's import of goods and services will be more than $15 trillion. China's outbound investment has been translated into over $300 billion of tax payments of recipient countries, created large amount of job opportunities, and contributed to local industrialization and modernization. Higher standard opening up has become a great cause that benefits both China and the wider world. Third, opening up is a resolute decision that is in line with the overall trend and will help us to sail forward. Despite the rise of unilateralism and protectionism, economic globalization remains the prevailing trend of history. China is firmly committed to expanding opening up. We have ensured continued success of the China International Import Expo, rolled out experiments for opening up in pilot free trade zones and declared that as a responsible major developing country, China will not seek new special and differential treatment in current and future negotiations at the WTO. China has promoted opening up by all through its own opening up and injected certainty and positive energy to the world. As for the work related to the opening up in the 15th five-year plan period, the recommendations have laid out plans in 4 aspects. First, we will take the initiative to open wider. Our opening up meets both China's needs and the world's aspirations. We will take proactive steps to align with high standard international economic and trade rules, prioritize the service sector, and expand market access in areas of opening up to enlarge the circle of friends in economy and trade. We will make faster progress in regional and bilateral trade and investment agreements and expand the network of high standard free trade areas. We will build hubs of opening up and ensure successful pilot experiments. Second, we will promote innovative trade development. The recommendations laid out plans for the 3 pillars of turning China into a trader of equality, that is, trading goods in services and digital trade. In terms of trading goods, we will expand trading intermediate goods and green trade, promote market diversity.
All right, we're just going to briefly step out from this ongoing briefing to tell you about what seems to be fairly consequential breaking news right now. We're seeing a really bad reaction in the Canadian dollar. So U.S. President Donald Trump, and just to paraphrase this very, very simply, the headline says everything you need to know. All trade talks with Canada have been terminated. There is a longer post, I believe, on why the U.S. has decided to go this route. More lands coming through. Canada did this to interfere with a Supreme Court decision. Again, context is key here. I'm looking at the Canadian dollar on your screens. It's now weaker, and as you can see, the reaction is right at about the time that we're getting these headlines coming through. I'm also looking at the currency against most of its peers, and yeah, the loonie is weaker across the board against every one of its major peers as I speak. So we'll need to really get more details on this, but there's very little I can glean from this at the moment.
Yeah, so this is regarding an ad that Trump is talking about that Canada has, as he's, quote, fraudulently used, that did speak badly of tariffs. This is what they were talking about here and why we are seeing this abrupt halt in trade negotiations with Canada. So we'll continue to watch this one, but the currency market certainly is reacting quite swiftly on the back of that post from the president. We'll bring you the updates once we hear a bit more, but in the meantime, let's bring in Jing Liu, Greater China Chief Economist at HSBC Global Investment Research. You've been listening in to this press briefing that's happening post-readout. Is there anything that we need to highlight that changed or new to you?
Well, I guess what appears to be missing is this mention of anti-involution campaign. But I think they have said it without directly mentioning it. Basically, there's a very strong word about we need to push forward to build a unified national market. And that seems to be a bit unclear what they are about to do. But I usually make a parallel with what the European Union said about build a unified market. And as a matter of fact, if we look at what China has been doing this year, they have introduced new laws and also amended old laws and regulations, basically emphasizing fair competition. And in the EU's case, there's this principle against state aid. So in China's case, it's about tackling the local protectionism. So I think it's a basically unspoken importance, and we're going to see how China will use it to rebalance the economy, including obviously the demand side stimulus and then the improvement on the social safety net, et cetera, et cetera.
Yeah, and I wonder because in March we'll get the fuller, the specific numbers and the goals and all the details that back up this exercise. And I wonder if it will show up in the form of higher inflation, because at the end of the day we want to see how that translates to higher expected inflation down the road. And can you make a direct link now between having a unified market in the way that the EU does, to your point, but EU states, it's member states, but in China it's provinces, for example, and possibly higher inflation?
I guess.
Or am I overthinking it?
China actually has an inflation kind of target, just that it doesn't seem to be aligned with, at least from the market perspective, not totally in line with the policy making. For example, this year they reduced inflation target from 3% to 2%, more reachable. But we still see a lot of challenges here and there. Okay. I guess they will continue to say 2%. That's more or less the norm in other countries as well. But in terms of the measures, I think there will be more stimulus on the consumption and more measure in pushing forward the urbanization, which can help increase the disposable income.
What do you make of this sort of intensified focus on technology and doubling down on really advanced manufacturing? It seems like they're under the strategy where, as long as I massively invest in innovation and the next future of technology, I'm going to solve all the problems in the economy, whether it's growth, whether it's income, whether it's productivity and the like. Does this strategy sort of work, this sort of tech supply side sort of growth model?
I think the tech supply side is more about a response to the U.S.-China rivalry. Trade tension first, now is tech rivalry, especially with more potential of the tax sanction. Basically, Chinese government feels like it has to rely on itself. So we see this kind of more push on the tech self-reliance and also advanced manufacturing. I would say that's already part of the plan because China has been trying to do digitalization and the green transformation, and eventually that will help China build advanced and smart factories that can boost productivity.
Sorry to interrupt. There's more breaking news coming through, and I just have to make it clear that this is still on China, but this is, I don't think, anything to do with the briefing that's going on. So based on our sourcing, it does seem that Chinese state buyers have stepped back from buying Russian oil after these sanctions. So we're looking at the likes of Sinopec have canceled some purchases of seaborne Russian crude after the news earlier this week of sanctions on Rosneft and Lukoil, adding to signs of disruption to the oil market. It's worth keeping in mind that similar dynamics, but with an India perspective, launched crude prices on a massive uptrend yesterday. We're not seeing that so far play out across the markets, although Shanghai crude is playing a bit of catch up there. But yes, and this takes us into, and Jing, let me bring you back, not specifically on this, but the China, I think some of the lines coming through from Huang on the Minister of Commerce, looking to expand China's pool of trading partners. It underscores this re-emphasis on exports and finding, leaning into this recent growth driver of exports. What do you make of just what's the export outlook effectively? And what does it mean for policy perspective?
Right. Actually, in yesterday's communique, it says that China will double down the efforts on the two-way investment, which means encouraging outbound direct investment and also facilitating inbound FDI. And just now, during the press conference, Wang Wentao, minister, actually saying that China still has a long way to go in terms of increasing the imports and also pushing for the outbound direct investment. So I think it is probably the focus for the next several years. In a sense, a re-globalization, we will likely to see China becoming a bigger buyer and also more source of capital.
Of course, next week is APEC. We have a date set between the two presidents to meet.
Very exciting.
Best case scenario, worst case scenario for you, Jinglu?
Well, I think I noticed that this is going to be a bilateral meeting. Unlike previously, Secretary Benson suggests it could be a pull aside, which means it's more formal. I think if it is a pull aside private meeting between the two presidents, probably they will set the tone and then the working level officials will sign the deal. But if it is a bilateral, especially President Trump said he will make a deal on everything, I think it's likely we'll see some breakthrough. At least China might start buying the soybeans again. There could be some breakthrough on fentanyl control. And anything more than that, I would say that's a plus.
Okay, what about access to key technology in the U.S.? Do you think that's part of, in terms of the best case scenario, like what's China going to get out of it?
I guess recently there are quite some noises, especially everything is on the table when U.S. officials talk about that.
Well, the U.S. is saying it. We're not hearing it from the Chinese, though, which is interesting.
Yeah, I think Chinese has been, in a sense, more cautious about what they want to say, what they want to achieve. I believe they have a strategy, and then they are trying to delivering their strategy. I don't think, given the rivalry between U.S. and China, there's going to be a breakthrough in the existing sanctions. Probably there's more clarification on the rare earth export control, some clarification on the U.S. side, and no introduction for any new sanction. I think that would be the baseline case.
Just before we let you go, we had the GDP print early this week. Are you looking to change your current is that changing some of the thinking around HSBCs now, the in-house projections?
Not really. I think pretty much on track. What probably the downside surprise is a contraction on the investment side. But I actually hold the view that Q4 will look better. Mainly because we see there seem to be a lot of measures in order to boost the local government financial situation. So that can translate into infrastructure investment, so on and so forth.
Fantastic. Thank you so much. Nice to see you, Jing Liu there. Greater China Chief Economist at HSBC Global Investment Research. And I believe we are going to take you straight back, of course, to this ongoing briefing that's taking place now in Beijing. Let's listen in.
Care services. Third, will empower the elderly to remain economically active. We will prudently implement a gradual, flexible, and differentiated approach to pushing back the statutory retirement age, optimize policies on age restrictions in employment and social security, actively develop human resources among the elderly, and expand the silver economy. Healthcare efforts must focus on both senior care and maternal and child care. It also needs to provide comprehensive services to the entire population, including prevention, treatment, and rehabilitation, so as to lay a solid foundation of health and population for Chinese modernization. Thank you. Thank you. I now give the floor to Mr. Jiang Jingquan to brief you on enhancing party leadership. Thank you. To uphold and strengthen the overall leadership of the party is the fundamental guarantee for advancing Chinese modernization.
All right, we're going to wrap things up here, of course, as we've been hearing a little bit more about this whole tech self-reliance. We are hearing that the president, in fact, according to Xinhua, has been speaking with non-party members of this 5-year plan. And once again, you are hearing this intensified focus on tech, where self-reliance supports quality development. What else are you seeing, Dave?
Yeah, I mean, we're just getting these lines out of Xinhua on this. We've been an hour into this briefing in Beijing, and what slowly emerged very early is an overlap, really, between the two themes here of self-reliance and this look inward to lean into your strengths here.
Yeah, also pushing for optimized regional economic layout, right? We'll continue to decipher some of the readings and lines coming through here from local media here. But that is it for us here on The China Show. Insight with Yvonne Man is next. Stay with us.